Welcome back to Trading Day. Your call 1300 30 34 35. Your call at yourmoney.com.au. That is the way to reach us and to get all of your market queries in for the next 40 minutes or so. Joining me in the studio today, we've got Elio D'Amato from Lincoln Indicators. We also have David Novac from Wealthwise Education. Now, Robert is calling in from Melbourne, and Robert, your question is about CSL.
Yes, good afternoon all. I feel a bit embarrassed asking this question. Just earlier, total portfolio is about 1.7 million. Now, at the moment, CSL is worth about 25% of my portfolio.
Yep.
Cochlear 11, CBA 10. Now, with CSL, I've had it for about $9. I've had it for a long, long time. I'm getting a massive dividend yield. I love the stock, of course, and I'm wondering, is that 25% such a good stock? Is that quite safe with relation to my whole portfolio total, would you think, to keep holding? I'm loath to sell, but I realise 25% is a fair proportion.
Yeah.
I've got a good proportion. I've got some ResMed, Fisher and Paykel, Ramsay, some of the other healthcare ones, of course, as well, but not near as much as in CSL and Cochlear.
No, understood. And, you know, making money creates its own problems too, Robert. I totally empathise and understand that. And our heart bleeds. We totally feel very sorry for you. That is tongue firmly in cheek there, in case you're wondering. Look, the only question I ask yourself is go back to what it was like in November. November 2018, I'm sure you'll remember, Robert, although, as Scott said, we can have short-term amnesia when it comes to markets, but you'll remember the price was around $170 back in November. Now, if you were still holding a very large portion of that in your portfolio at that time, how were you feeling back then? Were you incredibly nervous? Were you scared? Were you sweating a lot? Were you losing sleep? Obviously, when you're over-concentrated in a particular business, it's great when the thing goes northeast, but when it goes southeast, it amplifies your losses quite significantly, and it can have a very big detrimental impact. So don't feel, ashamed or disappointed in regards to asking this question, because it's a very similar and common one that a lot of our Stock Doctor members tend to have, because they're, more longer-term, fundamental-based investors, and a lot of them got in Commonwealth Serum Laboratories back in the day in 1995 and have ridden the stock the way through, and now that's created the same issue that you've experienced. But you've got to remember, you've got a decision to allocate your capital today. Notwithstanding that in the rearview mirror you've done really well out of it, that money, you can actually decide to do something with it today. You can decide to keep 25% in CSL. You could decide to sell down, reducing some of the risk of your portfolio and putting it into another quality business, or you can also sell down some of it and hold it in cash, ready for the next opportunity that comes about. Now, it's important to remember CSLs don't come around every now and then. Many of us only have 1 or 2 CSLs in our entire lifetime. So you can go broke trying to change to the next one, so there's no need to be silly there. But you just got to go back and think about how you felt in November when your portfolio got that big whack. Because since then, you've recouped $20 each of that stock. And based on that amount you told me, that's a significant amount that you've now made back. Is this the opportunity now to lighten the load, spread that risk out a little bit more? Well, being a prudent portfolio manager, one would have to suggest yes. Don't let the tax decision bother you. Obviously, you'll only ever have to pay tax in life if you make money. It's one of the great privileges of paying tax. I don't know anyone that pays tax when they're losing money hand over fist. David, you'll laugh at this. I remember as a junior analyst, someone once called me and were boasting about the amount of capital losses that they had banked up. That actually set me back weeks in my development as a junior analyst. I couldn't actually comprehend why that would be good. So don't let tax govern your decision in regards to whether you're going to sell or not. Make the decision in the best interest of the portfolio. You've had the rebound, lighten the load, spread it out. There's plenty of great businesses out there.
David, do you think 25% is too much?
Oh, yeah, that's pretty.
Yeah,
the weighting is very huge for a portfolio. And look, I did remember saying, and I've got to blow my own trumpet here, when it was 230, I said this has to be a profit-taking opportunity on CSL. Gone up a bit too far, too fast. Yeah. And now, I mean, look, I love CSL's been
best business,
absolutely unbelievable wealth winner. So you'd certainly, like Elio was saying, definitely would not sell this stock, all of them, I mean, but you'd certainly shave it back a bit to rebalance the portfolio for the caller. Yeah, absolutely.
Okay. Thank you very much for calling in, Robert. Now, Harry is on the line from Brisbane. Your question for the panel, Harry.
Oh, thank you for taking my call. I'm looking at selling S32. I already own BHP and Rio. and buying a healthcare stock other than CSL, which I already have. I guess my questions are, one, is this a good idea? And B, which healthcare stock would the panel recommend?
Okay, we've touted the advantages and disadvantages of CSL. Is there anything else that you're looking in terms of healthcare stocks?
Yeah, I really like the healthcare sector. I mean, you know, it's one of those sectors that runs really hot when the market's in a bull run, and then when the market goes bearish, everyone sees it as a defensive. It's a great sort of, you know, anti-hero type of scenario. But look, obviously, though, it's important to note that, yes, there's many great businesses, but there will be times where you do have to make the call to remove them. But, you know, if you're looking at the larger cap end amongst our star stock category, all of these are growth stocks, not income stocks per se. We're looking at, you know, Cochlear, which was discussed earlier, Fisher & Paykel and ResMed, both involved in the sleep apnea. Both of those are star stocks. Even Ramsay Healthcare, that had years of problems dealing with French and British regulators, have now crossed that hurdle, and things have gotten a lot better there. And if you want to add a little bit of dynamic growth into the portfolio, and you have the risk appetite to do it, two stocks in particular. One, Nanosonics, who make a desterilising product called Trophon 2, their latest updated edition, and the consumables that go with that. They've now released that. That should do well. That is one of our star stocks. And Pro Medicus, which is a company that stores all digital imaging and the like, and uses AI in regards to the management of that. And they've been winning contracts in the US quite aggressively, the most recent with Duke Hospital. But you're definitely paying for both Nanosonic and Pro Medicus. They're trading on quite high multiples. So, you know, if the market's kind to you, Harry, hopefully we do get a few more percentage sold off over the next couple of days to give you a better entry point in what are two great businesses, plus all the others that I spoke about.
David, what do you make?
Yeah, look, those two sound great. And Sonic, I think maybe Sonic would be a good one to look at as well. I mean, look, with South 32, though, I don't know if I'd be a seller of South 32 down here. It's a little bit late, and I actually don't mind South 32 at this level. There's a really good support level.
3.7.
It's been, look, it's really been a very big, volatile sideways move, this stock, but you're selling at the bottom here.
Yeah.
So I like the fundamentals of South 32, and I don't know if I'd be rushing to sell it now. As I said, it's a bit late. A bit higher up at 375 would have been a better, obviously, place to sell. But yeah, look, I wouldn't be selling it, just selling personally South 32, just to go into the healthcare space.
Right, okay. We are going to go for a short break. When we come back, we will continue to answer all of your questions. You've got half an hour left to get all of your market queries in. We'll speak to you after this break.